Welcome to Matters Financial and Geopolitical from a Frontier. I trust you had a lovely weekend. I certainly did. It was my uncle's 70-something birthday and we had a lovely time together. I look forward to the week. I hope you do too. I had an interview with Bonnie Tunya, who's newly married, with CNBC this morning. I'll put up a photograph from that morning interview and also a link to what I was saying. It was rather foreshortened, but I'll make the other points that I was seeking to make. Macro thoughts return. I've been back to trading futures quite heavily. Return to Paul Virilio's escape velocity theory, which I think applies to futures trading. The relevance of Virillian analysis for contemporary military thought lies in the fact that Virilio is the first critical theorist to posit a wholly circulatory theory of power. This becomes readily apparent in his analysis of the world economy, which he subsumes under the rubric of cyber capitalism, the digitalization of all forms of international exchange. And I quote, "The effectiveness of electronic money, or futures trading, lies in its mass, which increases its velocity of circulation. Virilio claims that as the last post-industrial resource, acceleration exceeds accumulation. The escape velocity becomes the equivalent of profit." Home thoughts. I go back to Einstein, who said the present is already the center of time. The past of the original Big Bang is not, and scientifically cannot be, that old center. The true center is always new. The center is perpetual, or to put it even more precisely, the present is an eternal present, which I thought was rather good. And then I'll take you back to Don DeLillo's White Noise, and I've got about 10 pages to finish. I sat at my desk in the dark, thinking of secrets. Are secrets a tunnel to a dream world where you control events, he asks. Political reflections. I saw this aerial footage shot by a drone shows a multi-story control tower of the Sergei Prokofiev International Airport damaged by shelling in Donetsk. It's a still image taken on January the 15th. Essentially I go back to something I wrote on the 25th of August last year, when I said, NATO has thrown out a whole new characterization of warfare called ambiguous warfare. And I said Eastern Ukraine has become a shadow zone. Of course, Oliver Stone has a different theory, which I actually subscribe to, which he said that the CIA had a role in Ukraine's armed coup. And I think they certainly did, and are calling a lot of the shots there at the moment. A Hezbollah statement said an Israeli helicopter fired missiles on Sunday at Jihad Mughniye's car in Quneitra near the Israeli-occupied Golan Heights. Jihad Mughniye was 20 years old. I'll put up a photograph of him. Nasrullah said retaliation is an open issue. And really, they are the most formidable Israeli opponents, Hezbollah. Nasrullah said on Thursday the frequent attacks on different sites in Syria is a major breach. We consider those hostilities to be against all the resistance axis, he said. Jihad is the son of Lebanon's Hezbollah late military leader Imad Mughniye. And I'll put up a photograph of him attending a ceremony marking his father's death in Beirut suburbs in March 2008. So quite a lot of history and a pretty totemic name in the context of Hezbollah. Killing the son of Mughniye is dangerous. I do not think that the group can be quiet now that the father and the son are killed. I expect that it will do something. He appeared in public for the first time a week after his father's death to pledge loyalty to Nasrullah. We are with you and we will go wherever you go. We will never leave the battlefield. We will never drop our guns. We answer for you, Nasrullah, he said when he was 16. And I'll put up a still from a film I've I found in the New Yorker depicting Hezbollah fighters during an operation against Israeli soldiers in the 2006 war. According to Bloomberg and everybody else, 2014 was the hottest year on record. On that note, I'll put up a photograph of the sunrise as of this morning at 6:45 a.m. as I parked the car and headed up into the office. ISIS throws gay men off tower, stones women accused of adultery, and crucifies 17 young men in a retaliatory wave of executions. According to, I think it is The Independent, images appear to show the man being pushed off as a large crowd controlled by militants watches on from below, and pretty horrific looking. Saudi reset with Iran is unavoidable, says MK Badr Kuma. I think he's right. The terrorists strike last week on the Saudi border post facing the Iraqi province of Anbar, known to be the Islamic State's first assault on the kingdom, could be the proverbial straw on the camel's back, forcing Riyadh into a profound rethink of its regional strategies imbued with the rivalries involving Iran. However, it is the attack on the Saudi post by the IS, killing 2 border guards and their commanding officer, that becomes a defining moment. The fact that the IS attackers included 3 Saudi nationals must be a rude awakening. To be sure, the blowback has begun. The Saudis hope to erect a great wall and insulate themselves from the IS barbarians next door, but that is sheer bravado. Put up a photograph I found from Don Clericuzio on January the 8th. ISIS released photos from its apparent attack that killed Saudi general on Saudi-Iraq border post. Currency markets, euro is actually popping higher. When I walked in, it was at 115.59. It's now at 115.91. Touched 114.60 on January the 16th, which was the weakest level since November 2003. Dollar index 92.64. Japanese yen 117.17. Swissy 0.8682. Pound 151.39. 151.58 now. India rupee 61.675. South Korean won 10.78. 82. Rial 262.14. Egyptian pound, I'll come to some data, 7.15.11, but that's been slipping. And the rand 11.56.41. ECB policymakers will meet on January the 22nd to discuss introducing new stimulus, including quantitative easing, a move that may add to pressure. On January 15th, the S&P scrapped the 120 euro cap on its exchange rate, as we all know. I'll put up a 3-month chart of the euro dollar. The Bloomberg Dollar Spot Index, which tracks the US currency against 10 major currencies, was little changed at 1,139 after climbing on January 16. It closed at 1147.54 on Jan 8, which was the highest in data going back to 2004. We're in a bit of a backing and filling session, but I think we'll turn higher soon. And as I said on the 29th of September, the point I'm making is that the dollar has just started getting going. There will be blood in the water. There is a small window if we want to be the sharks, I said. I'll put up the photograph of the shark at Dubai Mall and remind you that my second article of the year, on the 12th of January, I said the US economy is the comeback kid of 2015. Euro dollar, I'll put up a 3-month chart that got a little bit of a pop up to 115.90. I think we're going to parity. I said that on the 12th of Jan, and beforehand, the euro-dollar exchange rate is headed to parity and even lower, in my view, in 2015. I know Goldman Sachs are talking about parity in 2016, but I think the unraveling will happen in 2015 and much more quickly. My piece over the weekend was Sell the Euro. Jordan just told you to. The Swissy and a very arrhythmic world was my piece. In an article I wrote on August 25, 2014, I posited that my view is that the new normal is a very arrhythmic world. When I plugged Arrhythmia into my computer, it threw this up. For years, he'd been studying the phenomenon of chaos, of which an arrhythmic heartbeat was a perfect example. The Swiss franc move last week was a perfect example of arrhythmia in the financial markets. The Swiss National Bank abruptly lifted its 3-year-old cap of 120 francs per euro. Essentially, the SNB has been buying euros and selling Swiss francs at the 120 level, and it spent billions in this enterprise, ballooning their balance sheet to $556 billion equivalent. That was December 2014. With a single stroke of the pen, the SNB lifted the cap, and the Swiss franc surged up to 41% against the euro, to the strongest level on record in what was one of the biggest moves among major currencies since the collapse of the Bretton Woods system in 1971. The Swiss franc closed the week more than 20% higher against the euro or thereabouts. All of the more than 170 global currencies tracked by Bloomberg fell at least 15% versus the franc last week. The interbank market for francs was illiquid for hours after the event, and no traders with an open franc position were able to close it for a significant period of time at any broker. The violence of the move in the Swiss franc created big losses across the markets. The benchmark SMI index declined as much as 8.7% on the day, as investors calculated that a 20% currency appreciation would be a more serious headwind for Switzerland Inc. If I was sitting at the apex of Nestle or any other Swiss multinational, I would be demanding a list of possible acquisitions across the world in order to parlay the rally in the Swissy into a currency for acquisition. The S&B moved the deposit rate to minus 0.75%. In fact, the entire yield curve in Switzerland out to 10 years is trading at a negative rate, which again speaks to the financial market arrhythmia I've been speaking about. This means that the Swiss government can borrow money and will get paid for the privilege of borrowing. The decision by Thomas Jourdain's S&B came just 1 week before the ECB policymakers meet to discuss the purchase of government bonds. Jourdain, in my view, is front-running the ECB's decision, and therefore the signal emitting out of this arrhythmic normal is a very simple one. It is this: sell the euro. I returned to one of the traders I most admire, and I've spoken about him before, Thomas Stanley Druckenmiller, who said, and I think this, I agree with this because I think that's what I try and do, as a macro investor, my job for 30 years was to anticipate changes in the economic trends that were not expected by others and therefore not yet reflected in securities prices. Soros has taught me that when you have tremendous conviction on a trade, you have to go for the jugular. It takes courage to be a pig, as far as Soros is concerned. When you're right on something, you can't own enough. In this instance, I cannot sell enough euros. The euro is set to unravel and below parity, and very quickly. The WEF said, and the interconnections between geopolitics and economics are intensifying in its latest release. And I said, from a point of trading, these are the markets I like. And it took me back to Virilio's escape velocity. The effectiveness of electronic money lies in its mass, which increases its velocity of circulation. Last post-industrial resource, acceleration exceeds accumulation. If you trade futures, you know what I'm talking about. The escape velocity becomes the equivalent of profit. It takes courage to be a pig. There you go. I'll put up an image of that day's events that I found from Nanex LLC. I'll put up an image of Thomas Jourdain that I took just under 3 years ago myself, and I spoke to him at length actually that day. It was quite interesting. Very good piece about selling puts or vol on the franc was deemed to be an S&B guaranteed money for old rope, in the sense that they were sitting on the other side of the trade, so everyone assumed they would sit there forever. I like this quote: if you run the casino, you don't want the games to be boring, but you don't want them to be terrifying either. Dollar Swiss, I'll put up a 1-month chart. Matt Levine has written a very interesting piece in Bloomberg View. No one was supposed to lose this much money on Swiss francs. talking about it being a 20 standard deviation event, how VAR models had gotten comfortable with the reduced vol just before the event happened. As realized volatility gets lower, estimates of future volatility, and so estimates of future losses get lower, and so position limits get higher as banks feel safer with the risks they are taking, because on a historical basis they don't look that risky, and then the risk that didn't look risky becomes the one that gets you. Commodity markets, crude oil, when I walked in, was at $48.99. It's now at $48.40. I'll put up a 5-day chart. I'll also put up a 3-month chart. And I remain of the view, as I was on the 12th of January, that I do not see a near-term bounce in the oil price. I think it could average $50 a barrel for the next 24 months. There is no Hail Mary pass coming. Gold, that's been strong, obviously on a safe haven bid, last at 1276.855. Copper, I'll also put up a 1-year chart that had a bit of a tumble at the beginning of the year. Seems to have steadied a little bit, but we need to keep an eye on that. R.J. Magalong tweeted, because the Philippines made history, we love Pope Francis, Pontifex, and posted this photograph, and what an extraordinary turnout there was for him, and deservedly so. I like this photograph of Brazil children cooling off while being sprayed with water on Copacabana Beach. Coming to Africa, I saw this tweet from the Daily Monitor quoting Kaguta Museveni, president of Uganda. He says, "I cannot leave power to wolves." This photograph caught my attention on Reuters. A man burning a tire during a protest against Niger President Mamadou Issoufou's attendance last week at a Paris rally in support of Charlie Hebdo. Foreign policy is asking Africa's next revolution. Yet another African autocrat is looking vulnerable as protests royal Togo. General Nasrullah stands defiant. And there's some interesting analysis about what's happening there, the minutiae of what's happening, but it takes me back to the piece I wrote on the 10th of November, Ouagadougou's signal to sub-Saharan Africa. Go and have a look at that. South African all shares minus 2.58% year to date. Zuma is asking Parliament to reconsider the mineral bill. Under that mineral bill, it was going to give the state a free 20% stake in oil and gas ventures. Well, no one's really interested right now, so they've got to change that pretty quickly. Dollar rand 1156.45 goes to 12. Egyptian pound on the screen 715.19. The stock market is, of course, the best performing stock market in Africa, up 6.81%. But the Egyptian pound weakened for the first time since May. On an FX sale, central banks sold $38.5 million to local lenders at a weighted average price of 719.01. That's a decline of 0.7%. The pound fell last week on the black market to 7.82, which I think is a low for the year. Patrick Coburn has written a super piece, Sunday, 18th January, where are the Je suis Nigeria banners, he asks. President Obama has been criticized for not joining the 40 other world leaders at the mass march in Paris in the wake of Charlie Hebdo massacre, but by playing down rather than playing up the terrorist killings, Obama may have shown a surer instinct about how to deal with such attacks, however horrific, than those leaders who did turn up. It is understandable that governments and people want to show solidarity against terrorism, but in many respects the gargantuan size and overblown rhetoric of those responding to the murders of 17 people by 3 terrorists, treating the episode as if it was Pearl Harbor or 9/11, plays straight into the hands of Al-Qaeda and its clones. 3 terrorists, Sharif and Saeed Kouachi and Amidi Coulibaly, were rather pathetic figures before 7th of January, but have now achieved demonic status. This overreaction and wall-to-wall media coverage may prove counterproductive. The reasons for this are eloquently identified by Uri Avneri, who writes, "For other potential Islamic terrorists throughout Europe and America, this overreaction must look like a huge achievement. It is an invitation for individuals and tiny groups to do the same again and everywhere. Terrorism means striking fear. The three in Paris certainly succeeded in doing that. They terrorized the French population. And if three youngsters without any qualifications could do that, imagine what 30 could do, or 300. The over-concentration on the Paris events diverts attention from far more violent attacks carried out elsewhere in the world by Al-Qaeda-type movements. Talking about, in particular, about Nigeria, my friend and former colleague Richard Dowden has written that if all right-thinking people are united against terrorism, where is the Je suis Nigeria movement, he asks. Certainly there are explanations, excuses for the focus on France rather than Nigeria. Charlie Hebdo took place in one of the media hubs of the world, while the far northeast corner of Nigeria on the edge of the Sahara is one of the least visited, impoverished and dangerous places on earth. I used in 2004 to compare Iraq to Nigeria, saying the government in Baghdad was at risk of becoming like that in Nigeria, an oil state that was just not corrupt, but an institutionalized kleptocracy, in which everything was stolen and nothing was built. Then, as the Iraqi Prime Minister al-Maliki left the country to ruin, I thought the comparison might be unfair to Nigeria. As it turned out, I was wrong. The defense of France, Britain, and other countries from terrorist attacks like that in the Charlie Hebdo magazine depends on finding ways of dealing with the 7 or more civil wars being fought from Pakistan to Nigeria. These are the places where violent Sunni fanaticism flourishes and by which Western Europe has now been touched. Security measures and political policies need to be coordinated, and until they are, the march of 40 world leaders in Paris remains an empty gesture. Opposing terrorism or supporting free speech is much like being in favor of motherhood or against sin. The problem with the marches in Paris and elsewhere is that they may be a substitute for difficult policy decisions. Many of these, such as closing the Turkish-Syrian border or putting pressure on Saudi Arabia to control pro-jihadi media, would be hard to implement. But without such actions, everything else is bombast. Maybe President Obama was right to stay away. Nigerian oil share popped up for the second session running. It's down, nevertheless, 16.22% year to date. They've intervened with dollars as the Naira slid on JP Morgan. Nigeria's central bank sold dollars to stem the Naira's drop to a record low after JP Morgan and Chase & Co. said the debt of Africa's biggest economy may be cut from its local currency emerging market indices. Nigeria was placed on index watch negative after central bank measures announced in December reduced foreign exchange and bond trading, making it difficult for foreign investors to replicate the gauge. The Abuja-based regulator intervened after the announcement, according to Guaranteed Trust Bank plc. Nigerians will vote on February the 14th in presidential elections. Naira touched an all-time low of 188.48 on Friday, paired losses after the regulator intervened. It would be a big blow if Africa's most populous nation was excluded from the indices. Somebody else saying sourcing FX has become a nightmare. Theoretically, there are no capital controls and you can take out whatever you want. But the reality is that it's much more difficult. On the 14th of Jan, I tweeted it's a false market. I was talking about the Naira, which seems to be what JP Morgan are now saying. On the 19th of November, I said the currency heads to 200. It's heading over that level. Ghana Stock Exchange minus 1.22% this year. Economist has an interesting article, a smack track about heroin, saying East African states are being undermined by heroin smuggling. Kenya has asked the IMF for a precautionary loan of about 6.9 billion shillings. This is the Business Daily here. Helios sold half its stake in Kenya's equity bank. This was the announcement I referred to yesterday. On Friday to Norfin Invest. They're buying half that stake. Helios bought a 24.45% stake in 2007 for about $120.2 million. The official announcement, which I received from the stock market, is also up on Ridge wrap-ups. Mumia Sugar is the best performing share at the NSE, up 68.42% year to date. Safaricom is up 5.693%. 1% below a record high set in December. Uchumi up 16.4179% so far in January as it recovers from the rights issue and a very oversold position. Ben Mulwer tweeted, the Energy Regulatory Commission continues to rob us blind, and he's showing how crude oil prices have fallen and what's been transmitted. And what we can conclude is there's a lot more transmission to come, and that's a bullish thing. Kenya shilling 91.618 last. Nairobi all share, very strong week. Last week up 2.918%. It's positive 2.41% for the year. NAC 20 is up 1.78% year to date. And if you need to check any listed share, just click on the link for rich data, and you'll get all the data that you require. Once again, thank you for stopping by. Wishing you a tremendous week.